As we start the second half of earnings season, a familiar pattern is taking hold. Record amounts of money sitting in corporate coffers. And this time, it's more than the usual suspects, Apple, Microsoft, and Google. Courtney Reagan takes a closer look at why companies are hoarding cash and what they might do with it.
It's almost like corporations are hoarding cash. Total cash and equivalents are at an all-time high, according to Thomson Reuters data. As of this week, total cash held by S&P 500 companies totaled $933 billion, about $24 billion more than the same time last year, and the highest levels on record. When you break down the cash hoarding by sector, technology, which is typically the highest holder of cash, moves to number 2 behind industrials. Industrial companies are holding more than 12% of total assets in cash. While many point to a lack of profitable investment opportunities, others think it's for more defensive reasons.
Cash levels are very high because of a great deal of uncertainty. Corporations feel uncertain about the future direction of legislation and sequester and what the Federal Reserve might be doing.
Apple, far and away, has the most cash on hand, with $145 billion, followed by Microsoft with $87 billion and Google at $56 billion. While the cash reserves of those tech heavyweights is impressive, cash makes up more than 72% of total assets for mid-cap companies like Linear Technology and Intuitive Surgical. Individual investors are also holding on to cash, pulling money out of bonds, but not necessarily reinvesting in stocks. Experts say that while economic and financial conditions have improved, there's still enough uncertainty to keep investors on the sidelines, waiting for reassurance.
Cash is very simple and straightforward. And as I've gotten older, I prefer a lot of more straightforward interactions.
I don't trust credit cards. I don't trust banks. I like to keep my cash close to me where I know where it is.
I think I've been putting less than I would normally have put into the market. Made a change in that a few years ago.
It's certainly good for corporate and personal balance sheets to have some cash in the proverbial piggy bank for when opportunities arise. But companies do have a fiduciary duty to investors.
A company has to make their cash work. That's their responsibility to shareholders. So they're going to be looking for investments. They might be looking for acquisitions. They might be looking to actually extend new product lines.
In the meantime, many believe companies are likely to continue to raise dividend payments to investors and continue share buybacks. For Nightly Business Report, I'm Courtney Reagan.